let's welcome Aditya Agarwala, Head of Research and Investment at invest4edu.com. Hi Aditya, good afternoon. Good to be speaking with you. And Aditya, surprising move coming in on the benchmark indices because given the global handover, no technical expert for today in the market was anticipating such sort of a move. Are you also surprised by the Nifty up move today?
Hi, Srishti. Good afternoon. Thanks for the show. Absolutely. Nobody would say that they had anticipated this kind of an 150 point almost kind of an up move, especially given the fact that how we had closed on Friday's trading session. It's a surprise move without a doubt, but not without taking support at key areas of 25,000, 24,500, 24,550. So that happened to be the key support area, Srishti, and from there index has bounced back. And what is interesting to see is VIX had also tested almost those levels of 12.7, 12.8. From there, it's cooled off as well. Bank Nifty underperforms, continues to underperform. That is a bit of an overhang for the Nifty to see further upside from here on. So I would expect Bank Nifty also to start chipping in from tomorrow onwards. This week, I think Bank Nifty should also see a good short covering rally. And on the Nifty, I think you could see at least 24,900 kind of a move within this week. My sense is this up move that we're witnessing in trade today is likely to continue on the back of some more short covering and fresh long addition.
Okay, so that's the take on where the market could be headed, what has led to such robust moves in the market today. But Mr. Advani, I want to come back to you and get your sense about the entire metal space. Top gaining sector today, Nifty Metal is up about 2%, and particularly it's the entire steel end of the metal pack that's doing well. Case in point being SAIL, Tata Steel, Jindal Steel, JSW Steel. What are you making of this group of stocks, the entire metal index, and what's your positioning when it comes to this index?
So obviously, I'm very happy with this. The steel companies going up because at the end of it all, you do need as much steel as you need for cement, and you need for all the infrastructure projects, you need steel and cement. So I think both of those sectors are bound to do okay. And as I said, the government is continuing to spend in big amounts on those infrastructure, plus the builder sector has actually got a whole bunch of projects to complete. And with RERA in the background, they have to complete within a certain time. So there is a huge demand for steel. I think there's been some tweaking or talk of tweaking of some duties because there was some anti-dumping duty issue with China, which seems to be maybe getting sorted. So I think that that's probably the reason why steel companies have gone up, because in anticipation of that happening. And we all know how that works.
All right, that's the take coming in on the steel counters. Yes, of course, very good moves coming in on the metal pack in today's trading session. But with this, Mr. Advani, we'll let you go on that. Really appreciate you taking the time out and speaking with us. Thank you so much.
Thanks.
All right, but with this, viewers, let's move on. And all eyes on the RBI's MPC meet this particular week, wherein 77% of economists still expect a rate pause, down from 97% earlier. But odds of a cut are rising with inflation at a 77-month low and US tariff risk looming. GDP growth has slowed to a 4-year low, though the RBI still pegs FY26 growth at 6.5%. Ashesha joins in with what to expect. Ashesha.
Well, yes, first up, let's put the spotlight on what the broad expectation is from the Monetary Policy Committee outcome. Now, 77% of polled economists do not expect a rate cut from the MPC meeting this week. Now, remember, after the 25% tariff that was levied by US last week, odds of rate cut have now risen by nearly 25%. But of course, 77% estimates suggest that perhaps we will not see a rate cut this time around. Let's take a look at some other figures. Then 97% economists polled earlier expected status quo, but that now has fallen from 97% earlier to 77% now. And as I mentioned, this is because of the 25% tariff that was announced by United States last week. Let's take a look at where the current rates stand. We have CRR at 4%, SLR at 18%, bank rate at 5.75%, repo rate at 5.5%, and SDF rate at 5.25%. So these are some of the important rates that you need to keep an eye out on ahead of the monetary policy meeting outcome. To put things into perspective, WPI inflation currently stands at 20-month low. CPI inflation at 2.5%, which is at 77-month low, and we have demand concerns which continue to impact the kind of outcome Reserve Bank of India and the monetary policy could come out with in this particular meeting. Now let's take a look at GDP figures then. Fourth quarter FY25 GDP stood at 7.4%, and for the last full year, which was at 4-year low, we saw GDP which came in at 6.5%. We also have what brokerage houses are estimating for FY26 GDP. We have RBI, which is predicting 6.5% GDP for FY26, IMF a little conservative at 6.2%, World Bank at 6.3%, S&P Global at 6.5%, and CRISIL, which is also expecting 6.5% GDP for FY26. So anywhere between 6.2 to 6.5% is the broad estimate. As far as CPI estimates are concerned, RBI is predicting 3.7% for the month of June and nearly 4% for the month of April for the full year FY26. So the estimate has changed from June to April. Now apart from that, we also have GDP estimates where RBI as of June is predicting 6.3% growth for the fourth quarter and 6.5% for FY26. But yes, largely the expectation is that we are not expecting rate cut, but there's a consensus, there's a divided view that perhaps we could probably see a 25 basis points rate cut in the meeting this week.
Okay, Ashita, thanks so much for taking us through that. Well, of course, all eyes are going to be on the MPC outcome day after tomorrow. Remember, the meeting is underway. It's a 3-day meeting which has begun today. So the outcome for us will be on Wednesday at 10 a.m. But, well, the beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments too. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure a financial future. As part of the campaign, we are observing the 4th of every month, which is today, as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.